What do you think? Is this just short-term noise? This recent downdraft in the price of gold and silver? Yes, it is painful. Is it starting maybe to feel like they're pulling the rug out from underneath us yet again? Or is it just short-term? Is the long-term story, the long-term thesis for silver, for gold, is it still in place? Are we still in a secular bull market? Are we still in a upward trend? And will everything work out okay? We need to apply some intellectual horsepower to this, guys. Take a look at what's going on. What caused the action today? Is it something that we can view as sustainable, or are there bigger long-term factors, more powerful factors at play that will continue to help appreciate the price of gold, silver, and the other precious metals? Let's talk about it right now. What are you hearing as the reason why gold and silver are down today? What I'm hearing and what I'm seeing is they're trying to feed us the fear of China lockdowns. Oil is going down. They're talking about OPEC, and of course the US dollar strengthening. Those are the four key factors that are really affecting the general markets and the gold and silver price alike. Now, when we look at China locking down, that scares everyone, right? That the economy in China slowing down because of lockdowns will permeate throughout the world and create economic hardships everywhere. On the oil front, well, that's going down because of the prospect of decreased demand from China. But we also had OPEC come out and say they're talking about a production increase. Didn't they just decrease like a month ago? Now they're talking about a production increase. That's making the price of oil go down precipitously. But all this fear about China and the slowing economy, that's making everybody run to the good old US dollar, you know, that beacon of stability and faith in the world. For some reason, everybody runs to the dollar. That's making the dollar go up in value. And you know what happens to the price of precious metals when the dollar goes up? The price of the metals goes down. And that's what's happening today. But is there more to talk about? Much more interesting big picture things? You bet there are. And we're going to do that next. First, I want to say hi to Avinash, one of my regular faithful subscribers and viewers. I'm glad you're here in the basement. I'm glad you are here in the basement with me. There is no Ron's Basement without you. Thanks for your time. Thanks for your camaraderie. We're part of a big group, even though right now it's just me and you together. If you enjoy my content, please subscribe. Now let's move on to these big picture items. On the positive front, because you like positivity, right? We all like positivity. Bloomberg, that esteemed financial news organization, put out a report that said that asset managers are becoming more bearish on the dollar. That means they think the dollar is going to start heading down. You know what that means for the price of precious metals. That means they could start heading up. So we want to draw some light on this report from Bloomberg that basically says the dollar has maybe peaked or is in its peak range, and that we could see some easing in the dollar value, and that would be good news for the metals. And we also got an interesting piece of information from none other than our friends at Goldman Sachs. They said the bear market is not over in our view. A closely followed Goldman Sachs strategist, Peter Oppenheimer, wrote that in a new note. He also said the conditions that are typically consistent with an equity trough have not yet been reached. We would expect lower valuations, a trough in the momentum of growth deterioration, and a peak in interest rates before a sustained recovery begins. So Goldman's saying the bear market's not over. Now, big picture, right? Goldman's saying the market can go down. They're obviously saying the economy can slow down. The market's saying that this morning, right? That is a stagnant economy or a recessionary economy. We know that the inflationary pressures are still in place because a lot of the inflation we're having right now is supply side inflation. Go to a car dealership. I was at a Honda dealership this morning. buying a part to fix my Honda. But I asked the guy, do you guys have any new cars? He's like, basically, we don't have any new cars. There's a supply crunch still in this country, which could be exacerbated by a pending railroad union strike. We know that like trucking freight is down, the across the ocean, the intermodal, the big container ships, they're all down. So we know we have a slowing economy and a slowing supply of goods. That slowing supply of goods, that puts upward pressure on prices. When you have rising prices, high prices with a stagnant economy, you have stagflation. Right? Now we have to really put on our goggles, our forest through the trees goggles to see that. On the other side of that forest is a pot of gold and silver, by the way. Most people have no clue this is going on, have no interest in this. But a stagflationary environment is fertile ground, has been proven over the millennium to be fertile ground for the price of gold and the price of silver. So today's no fun for us investors in gold, in silver, in the precious metal mining stocks. Trust me, I'm right there with you. Days like today just stink, right? They don't feel so good if you follow the markets closely, or maybe too closely like I do. However, when we zoom out and look at the big picture of what's going on, I mean, we haven't really even felt the effects yet of all these interest rate hikes by the Fed. Those things are such lagging effects. The next 6 months could get very, very interesting. Not to mention the fact that the crypto world is blowing up. We don't even know how that's going to play out. Maybe it'll be a nothing burger, but it could potentially be something very, very big. One thing for sure, I'll be here for you through it all. I appreciate you joining me today. You're always welcome here, and I'm going to look forward to seeing you next time.